Good afternoon, folks. Reed here. Today, we're going to have a very interesting discussion on cryptocurrency, particularly Bitcoin. Recently, if you don't know much about cryptocurrency, I think you should probably take a look at it. All right. My assumption is that we're living at the end of the Industrial Revolution and we're in the beginning of the information age. And I believe like hard paper currency, fiat currency, paper currency was definitely the tool, the currency of the previous human eras, currency of the Industrial Revolution. I don't think it's going to satisfy us the currency of the information age. I think the currency of the information age will need to be able to carry information along with it. I think that's the huge difference between the Industrial Revolution and their currency and the information age in this currency. And the information in this currency, the currency should be information. And that brings us to this discussion about cryptocurrencies, all right? And the recent crash. Let me go here. Say crypto crash. Now, some of this stuff is very interesting. Some of this stuff is kind of interesting. Let's crypto flash crack, insane corruption. Okay, let's see what it says here.
Hello, traders, and welcome back to the Trading View channel. In this video, we're introducing our...
But just let me... Before we do this, let me just look and show you what the cost of Bitcoin is. Get Bitcoin price today. Okay, so let me just show you this, okay? Let me go with the past 5 years. Okay, this is the price of Bitcoin. So right now, one Bitcoin is $111,000, $434.10. Now, Bitcoin is the first sort of cryptocurrency, crypto token, but it doesn't do anything. The only thing that gives it is real value is that it's only going to have a limited supply of 21 million. And because it only has a limited supply, that makes it rare. And so Bitcoin's price is based upon other people wanting to have it in the future. But when they have it, it becomes something like a piece of artwork or some type of asset that doesn't do anything. But so it's just remarkable to see how this asset, how volatile it is and how it continues to go up and down. So look here, 5 years ago at 5 years ago, it was at $11,000 a token. And look at all of this. Here, $61,000. Then it dropped back down to 16,000. Then it went up, right up again, 65,000. Then 100. In 2025, $100,000 a token. Now we're up here. So we're talking about this. What we're going to talk about is over let's say the 5 days. Okay, we're talking about, okay, let me say the past month. Okay. What we're talking about is this discussion right here is the volatility here. At some point on October the 7th, Bitcoin was worth $124,000 a coin, right? Then after this, we saw this decline here and it lost a significant amount of money. So this is the discussion we're having now. This loss in the value may have been a hit. So it may have been orchestrated. And so that's what this is. So it may have been orchestrated in what's called a crypto flash crash, meaning someone bought a lot of, hedged a lot of bets against Bitcoin, and they clashed, they cashed their bets in, and they caused the people to sell, and they caused the value to drop.
AI indicator, which we developed in partnership. This video is brought to you by Incogni. Stick around to hear more. This is a well-known fact. But what happened on October 10th is unprecedented. Following a social media post by President Trump at precisely 4:50 p.m. Eastern Time, which is important, following a social media post about new tariffs being imposed on China, Not only did the traditional stock market take a hit, actually the regular stock market took a hit after this post right here, in which he said, quote, "One of the policies that we are calculating at this moment is a massive increase of tariffs on Chinese products coming into the United States of America," end quote, which happened at 10:57 a.m., as in right here before the market dumped. But later on at 4:50 precisely, he said this, quote, "Starting November 1st, 2025, or sooner, depending on any further actions or changes taken by China, the United States of America will impose a tariff of 100% on China over and above any tariff that they are currently paying. Also on November 1st, we will impose export controls on any and all critical software," end quote. Honestly, he's been threatening things like this constantly during the administration. I don't think anyone is actually surprised by this. But one thing to consider is timing. At 4:50 p.m. Eastern on a Friday of all days, the New York Stock Exchange is closed, but the crypto market is always open. And following this announcement of further tariffs, enormous ones as well, on top of export controls on critical software, the crypto market basically fell apart. It's called a flash crash is the technical term, where rapid decreases in token prices trigger liquidations and subsequent forced selling afterward, which compounds the problem in a downward spiral. Algorithmic trading is a very delicate thing lately. When the cycle starts, it can be difficult to stop. And it certainly didn't help that major exchanges like Binance and Coinbase encountered service errors during like the peak of these problems. Some of them so bad that they'll be compensating their customers as a result. But all things together, it was a pretty big and very fast crash. Bitcoin, which had already been struggling throughout the day as a result of the president's first tweet or post on Truth Social or whatever, fell off a cliff after the second one, okay, like right over the edge, losing over $10,000 of value in seconds, literal seconds. Altcoins, many of them in the top 100, lost even more, sometimes approaching 70% losses on token value in a hurricane of panic selling. The worst ones basically zeroed out briefly, and liquidation pressure was mounting all over the place.
So this crypto has become a very hot political topic. It's become the number one discussion globally, because now they believe that Trump found a way to leverage the U.S. debt and distribute it throughout the entire planet through cryptocurrency, particularly through stable coins. And so you see the Trump family heavily investing in stable coins and things like that. But look at this series of videos here, and I'm just pulling this up as I go along. But I also want to find the. Let's see here. Okay, maybe I can find it in here. I want to find the Russian. Okay, here is this: the Russian economist describing Trump's possible strategy of dumping U.S. debt into cryptocurrency.
Cryptocurrency markets.
The point of what I'm trying to say is that I think you should probably really start considering crypto because I think it's a very volatile market, so you have to be very careful. But second, it's the markets like the stock and crypto markets. Those are the only areas in our society where you can actually invest your resources, make a gain, and no one is allowed to take the gain. See, the problem with most of us, particularly on the south side of Chicago, when we work, someone else takes the labor of our work. They take the productivity of work. They take the benefits of our work for themselves. And we're just stuck doing the work. But if you were to put your resources, your money, meaning your work, into networks like stocks or crypto, then when you get gains from those for participating in those networks, then you have the right to keep those gains. So in order for you to get out of debt or your financial situation, particularly on field in Southside Chicago, you're going to have to learn how to invest in crypto and other stocks, because those the value of those things will continue to boom over time. Now, this is the Russian economist who's talking about crypto and how the United States is planning on basically dumping their debt into crypto. Okay, here it is.
Remember how much debt they have, $35 trillion. Essentially, these are two alternative segments to the global currency market. Washington's actions in this direction clearly demonstrate one of America's main objectives: They are very eager to solve the problem of declining trust in the dollar. The US, just as it did in the 1930s and 1970s, will solve its financial problems at the expense of the entire world, driving everyone where? Into the cryptocurrency cloud. Over time, when part of the US national debt is placed in stablecoins, the US will devalue that debt. Once again, in simple terms, right now they have a $35 trillion currency debt. They move it into crypto, into the cloud, devalue it, and start from scratch. This is for those who really love dealing with crypto.
Hey folks, Donald Trump Jr. here with urgent news. The world's central banks are making unprecedented moves, and it's time for all Americans to pay attention. In 2022 and 2023, they bought
They're selling
more
gold again
than at any
So
other
I don't
time
know.
in
I don't
history.
know what
And now,
the Trumps are
2024.
always. They're always spinning it somehow. So here, and what he's saying is that they're planning on putting their debt into crypto. So, for example, the stable coin. Let me see here. Now, recently, the U.S. Congress passed a law on stable coins. Currently, because stable coins now have federal legislation behind it, and because it has IRS tax rules behind it, this means that the stable coins will be an electronic version of the currency that it's stabilizing. So the US dollar stable coin is a digital version of the US dollar now. And so that means that when people buy these tokens throughout the entire world, they also take on the liability of the US debt. So he can spread the debt for the liability for the US debt across everyone who owns or purchase stable coins.
Afternoon, we take a giant step to cement American dominance of global finance and crypto technology as we sign the landmark Genius Act into law. The Genius Act creates a clear and simple regulatory framework to establish and unleash the immense promise of dollar-backed stable coins.
Let me see. What is the landmark? What is the Landmark Genius Act? The Landmark Genius, the Landmark Guiding and Establishing National Innovation for the U.S. Stablecoins Act, okay, is the first federal law in the United States to create a comprehensive regulatory framework for stablecoins. It was signed into law July 18, 2025, August into October. Several months ago, to establish rules for issuers and aims to bring stability, oversight, and consumer protection. Key provisions of the Genius Act: 100% reserve requirements, meaning the issuer must fully back all stablecoins with liquidity, higher quality assets such as U.S. dollars, short-term treasury bills, or deposits at insured banks. So they're saying that if you're going to have issue one stablecoin, you must have it backed up by a high liquidity asset, such as a U.S. dollar. So you have to have the equivalent amount in U.S. dollars, or in short-term treasury bills, or you have to have deposit at this insured bank. I don't know what's the last one. Okay, priority for stablecoin holders. In the event of an issuer's insolvency, stablecoin holders receive priorities over all other claims regarding the reserved asset. Okay, great. Okay, federal and state oversight. A dual federal state licensing system is created for stablecoin users. Federal and state oversight. A dual federal state licensing system is created for stablecoin issuers. Federal oversight is handled by agencies like the Office of the Controller of the Currency. While state-regulated issuers can operate under state regimes that are deemed substantially similar to the federal standards. Okay, great. Prohibition on algorithmic stablecoins. The law effectively bans algorithmic stablecoins and requires that stablecoins be fully backed by specified reserved assets. So if you're going to issue a stablecoin, you're going to have the money in dollars or reserves or something like that, or you're going to have to put down collateral on something that's that's of higher value. Anti-money laundering and sanctions compliance. Issuers are deemed financial institutions under the Bank Secrecy Act and must comply with federal anti-money laundering and sanction laws. This includes having the technical capacity to freeze or block transactions, which required by law. Next, disclosing and auditing. Issuers are required to publish monthly reports detailing their reserve holdings. Those with more than 50 billion in outstanding stablecoins will also undergo annual financial audits. Okay, so you have to undergo annual financial audits if you're going to issue your stablecoin. Okay, foreign issuers regulations. Foreign stablecoin issuers can operate in the United States if their home company's regulatory regime is determined to be comparable to the Genius Act framework that the issuers must register as an OOC. So, okay, great. So you can issue, so that means that you can go to another country, create a stable coin, and still use it in the United States as long as the home country's regulatory framework is similar to the Genius Act. It'll be interesting to see which countries are no interest for holders. The Act prohibits issuers from paying interest or yields to stablecoin holders. Okay, no government endorsers. Issues are banned from marketing stablecoins in a way that suggests that they issued, guaranteed, or approved by the U.S. government. So I don't know, it's U.S. dollar stablecoin, USDC. You know, it sounds like it's a U.S. dollar stablecoin. Yeah. What does it mean for the crypto industry? Okay, the Genius Act is expected to have significant impacts on the digital asset landscape. Greater regulatory clarity. It ends years of legal ambiguity for stablecoin issuers by clarifying the compliant stablecoins are not considered securities. Great, right. Increase institutional adoption by providing a clear and strong regulatory framework that acts in expected and to drive more traditional financial institutions like banks to enter the historic stablecoin space. Enhance consumer protection. Strong reserve requirements and disclosure rules are designed to protect stablecoin holders and enhance trust in the market. Global influence. The Act's extraterritorial reach means the U.S. then could influence stablecoin regulation compliance globally. So this is what we're talking about there for stablecoin. Let's see what happens here.
This could be perhaps the greatest revolution in financial technology since the birth of the internet itself. With the privacy, flexibility, and decentralization of cash, this revolution has the potential to supercharge American economic growth and empower billions of people to save and transfer in U.S. dollars. This is
going to be amazing because, so let's say that, and then let's go to, let me see a list of stable coins. Let me see, Binance. Let me see here. Okay, so right now Bitcoin is $111,000 a coin. Ethereum here is $3,900 a coin. Okay, let me see. They want the, I don't want to continue like that. I just want to go. Okay, let me see. What is this? Okay. I just want to look at a few of the coins. I don't want to. Okay. So here's a Tether is a stable coin here, and so they say it's $1, right? Now what they're saying here for the people who are issuing this token, that every time they issue, so here, if they have a market cap of $180 billion, that's more than $180 billion. Yeah, okay, yeah, $180 billion. Then they should probably have an equivalent amount of US dollar cash or short-term treasury bills to cover that, or they have to have some type of asset that's worth more than that. So this is what the law goes. This is what the law allows. Now, anyone who purchased the Tether will essentially be pegging themselves to the US dollar. So, and therefore, whoever holds the Tether, the value of their token will fluctuate at the same level one-to-one as the US dollar. So this is a way for the United States to actually spread their debt off of US citizens onto anyone globally that's buying cryptocurrencies. So I do believe that this is the cryptocurrency is going to be a mechanism for the U.S. to dump their debt. And so I think the cryptocurrency market is going to be very valuable in the future. I mean, very valuable in the future. Let's see here. And let me show you some of the other ones. Let's see. So here's Bitcoin here for $111,000. You see Ethereum here for 3,900. Tether, which is again a stable coin, so it's going to be one-on-one with the US dollar. See, and then these coins like BNB, I don't even know what these things do. Let me see if I can understand. Okay. The Binance coin is the native digital asset of the Binance ecosystem. Okay. It's primarily used to pay transaction fees on the Binance chains and Binance Binance Smart Chain. It also provides utility benefits to users in the Binance exchange so they can receive discounts on trading fees when using Binance. And so this is their own token here, 162 billion. The amount of money and resources that's going into these people who are developing crypto makes them gods. Can you imagine $162 billion in cash? I mean, that makes you incredibly brilliant. Binance was founded in 2017 by Changpeng Zhao, a developer who had previously created a high-frequency trading software called Fusion Systems. Binance was initially based in China, but later moved its headquarters following Chinese government increasing regulation over cryptocurrency. Binance offers crypto-to-crypto trading and more than 500 cryptocurrency and virtual tokens, with a strong focus on altcoin trading. Additionally, Binance has among the lowest transaction fees of cryptocurrency exchanges thanks to its commission structure. Fees generally start low and then only move lower. Binance uses a volume-based pricing model and even gets further discounts if it's proprietary cryptocurrency to buy. If you use this proprietary cryptocurrency to buy and sell. See, this is we're entering. This is the information age here. This is okay in practice. BNB is a crypto asset similar to other digital assets on the market in that it rises and falls in value as people use and trade it. It should be noted that BNB works in tandem with two specific blockchains, the Binance blockchain and the smart contract, and the Binance smart contract. The BCS is a separate blockchain built in addition to Binance, running parallel to BC and carrying different features such as a smart contract capability. Interacting with either blockchain, BCS or BC, requires payment on the network fees in BNB. Yeah, so basically you set your whole network and then you put your token on the network to do all the transactions for you. And people buy your token in order to do the transactions. Since 2017, it spends some of the revenue each quarter to purchase back and burn BNB. Binance will continue to burn every coin every quarter until it has purchased purchased and destroyed over 100 million Binance coins, or half of its original maximum supply. So this Binance store, it destroys it destroys the tokens in order to increase the value of the previous tokens. The tokens less in existence. The process decreases Binance coin supply and affects its rarity, which can potentially affect the asset value. Binance also offer customers the ability to earn staking rewards for holding coins. Staking generates income on certain crypto assets when it's used to validate transaction chain. Now, so Binance is going to be a major player in the information age, and I would suggest, I think you should buy their token. And we're early in this game, so 50 years, and you want to keep these things for 20 years. You don't know which one of these things are going to blow up. Let me see here. All right.
Increased demand for U.S. Treasuries, lower interest rates, and secure the dollar's status as the world's reserve currency for generations to come. The reserve currency is so important. If we lost that would be like losing a world war. The entire crypto community, for years, you were mocked and dismissed and counted out. You were counted out as little as a year and a half ago. But this signing is a massive validation.
Yep.
Yeah, they would get it.
The new crypto bill will unleash chaos.
Next to the U.S., where the Senate recently passed the Genius Act, a bill establishing regulatory frameworks for the stablecoin, a cryptocurrency that will hold the same value as the U.S. dollar. For the digital assets industry, the move is a historic milestone. But UC Berkeley professor in economics and politics, Barry Eichengreen, warns that it could bring economic chaos. And he joins Walter Isaacson to explain why.
Thank you, Bianna and Professor Barry Eichengreen. Welcome to the show.
Thank you, Walter.
The Senate just recently passed something called the Genius Act. It was a bipartisan bill passed overwhelmingly, and it would create something called stablecoins, which are a cryptocurrency or digital currency. Could you explain first what a stablecoin really is?
A stablecoin is a cryptocurrency, but it's a special kind of crypto. The company that issues it might be a bank, might be a tech company, might be a crypto exchange, promises to keep it pegged 1-to-1 to the US dollar.
So it doesn't float like Bitcoin does. You don't have to worry about it going up and down.
Right. It's supposed to hold its value, and the issuer buys and sells it with the intention of keeping that value stable.
And so companies like Walmart and others could issue stable coins in order to have financial transactions that don't have to go through credit cards. Is that right?
That's right. So you could use Walmart coin at Walmart, but conceivably.
Yeah, see, this is what I'm trying to say. I think it's important for you to start looking into getting into crypto and the blockchain and start buying these tokens now, while they're still trying to figure it out, because it's going to run. I can't see how Walmart is not going to have their own token where you can it can track everything instantly without having all the middlemen, right? You wouldn't need the cashiers and all that stuff. It's going to revolutionize everything. So, I think it's important that you start looking into crypto. And then I'm going to show you my cryptocurrency account and my strategy to crypto. I think my strategy works very well. My strategy is just, as soon as the cryptocurrency comes out, just go ahead and buy it. Try to get at least 1,000 of these tokens and stuff like that. Because these things are incredibly complicated. We're building our crypto. We have our blockchain, and we're building our cryptocurrency and our token, and we're thinking about all the properties and things. It's amazing. So these things are very complex concepts, and crypto is trying to you take crypto and see how can you apply it to your industry, or see how you can apply it to your specialty or what you're doing. That's the thing. If you can figure out how to apply crypto to your area expertise and everything, then I think you have the potential to basically to revolutionize everything. And I think this is probably the most important thing you can think about now, because everything is moving towards this. And so my strategy is that when the coin comes out, just buy it, right? And because something is going to hit, and just buy it and hold. And I'm going to show you my wallet. And I have millions. I've purchased millions of tokens, of various tokens here and there. I just have everything. And I'll just show you how the value of these tokens and where it's going. Now, I did take a hit, a serious hit with the crash, but I just used that as an opportunity to buy more of the tokens. Hey, this stuff is not going away. So as soon as they hit the bottom and everything, just buy some more, because next week, hey, they're going to be back on top again. You know how this goes.
With other retailers and your neighbor down the street, World Liberty Financial, the Trump family crypto company, has a stable coin plan, I think, underway. So there could be hundreds or even thousands of these in principle.
How are they different from something like Tether that already exists?
Well, they would be exactly like Tether, except they would be regulated by our federal government, by the Fed, by the Federal Deposit Insurance Corporation, by the comptroller of the currency. So they would be given legitimacy, if you will, by the federal government. They would need a license in order to operate.
And so that would make them more regulated, make it more safe than the sort of free things we have now. Why is that not a good thing?
Well, number one, we don't know how safe. So the principle is that a company issuing a stable coin would hold $1 worth of reserves in liquid, reliable form for every dollar stablecoin token that it issued. But
by that you mean like treasury bills or something?
Treasury bills or something like that. But that's basically what money market funds do as well. And if you think back to the global financial crisis to 2008, you'll remember that an important money market fund broke the buck. Its dollar share went down to 97 cents because the bonds it held turned out to be worth less than promised. And you have to think that regulators are going to be really smart and on the ball to believe that this can't also happen with stablecoins.
Your New York Times op-ed.
Yeah, he made a very interesting point. During the financial crash in 2008, they were giving patient people houses without being able to pay the mortgage. You didn't even have you can buy a house without a job, right? And so they rated the people as an A rated or something like that, very high rating. And so when the people could impede, and then they sold these bonds overseas, and they looked at these ratings for all this U.S. Property, and they thought it was a good bet. But when you looked at the actual people, the people were interest only holders, and none of them can really afford their lifestyle. So the housing market crashed because the people really couldn't afford the homes. Now he's saying here the stable coins is built on that same type of model, and the companies are simply going to be lying about the reserves they hold. And so you have to have regulators really follow up on the reserves for the companies that are issuing these stable coins. Otherwise, they're going to simply be lying. And so if they don't have enough reserve, then the value of the token is going to be less. And so it's going to be chaotic to some extent. I see here said that the Trump family is invested heavily into crypto. And look here, Bitcoin will crush the old Wall Street finance. I think so.
They're awaiting President Trump. He's holding a press conference with Prime Minister of Israel, Benjamin Netanyahu. Meanwhile, folks, a lot of focus now, particularly on Wall Street, but the world on the crypto space. It continues to expand and is attracting a whole lot of new players. from Wall Street's biggest firms, who were once, of course, doubters, to Eric and Donald Trump Jr., whose company's American Bitcoin has quickly become a force. Joining me now, American Bitcoin co-founder and chief strategy officer and Trump Organization vice president, executive vice president, Eric Trump. Eric, I just want to start, because one of the things you said in this New York Post article that leaps out at everyone is that America's financial future, that crypto is America's financial future. And I'm curious when you had this epiphany, because a lot of people have had the same epiphany along the way.
Yeah. Well, Charles, I had the epiphany. I think you saw it, and you probably reported on it better than anybody, when I got debanked by everyone. I mean, Capital One sent me a letter in the middle of the night stripping 300 bank accounts from, golf courses and hotels, our properties as well as anyway, for doing absolutely nothing wrong. And then all of a sudden I started meeting people in the crypto space, and I realized how brilliant they were. I realized how antiquated modern finance is. Laura and I went out to buy a house, right? When we got financing, because the rates under my father were like 2.1%. It took me 120 days to get a mortgage from a bank that I had banked with literally for 25 years, right? Because they had to go through Know Your Customer. I'm sitting there saying, this is crazy. Every single week, I'm chasing a Swift wire transfer, payment that's coming into one of the hotels or leaving one of the hotels. And if you don't send it by 4 o'clock on a Friday, it's not getting there until like Monday afternoon. And you're sitting there saying, why can I send hundreds of millions of dollars?
So he's talking about the advantages of using crypto as opposed to running his business in the Industrial Revolution time. His business model is an Industrial Revolution. And you can see how the Trumps are pivoting very heavily towards crypto, and so should you,
For the Bitcoin overseas instantly or receive it instantly with virtually no fees. Bitcoin's the way of the future. American Bitcoin, which is the company that I founded, I'm very, very proud of. I think it's going to be one of the great Bitcoin companies anywhere in the world. And clearly, there's no doubt in my mind, cryptocurrency is going to replace traditional finance, TradFi, and it's happening so fast. I mean, cryptocurrency is literally outpacing, the growth of the internet, in the 90s, Charles. And I've never been so clear about something. I've never been able to see something so clearly in my life. And it's been a lot of fun to be a part of this.
Okay, I think that's it. Very interesting. Let me see here.
From Wall Street South to the constellations, we are witnessing another trading first on the NASDAQ today, crypto exchange Gemini.
And I just want to encourage you to sort of go ahead and get in the market. It's very risky, but I think if you start buying, I'm buying and I'm just holding everything. I'm just going to hold everything. And I looked at my wallet yesterday, and I'm basically in the red on basically 75% of the tokens. Only 25% of the tokens are in the green. And I purchased millions of the tokens and things like this. And so I'm going to show you guys my cryptocurrency trading site and things like that. I use Coinbase and also Kraken. So I'm going to show you my strategy. It's a buy and hold, and I think maybe 90% of them are going to be wiped out over the past 20 years and stuff like that. And I think the ones that survive over the next 20 years, I think they're going to be the predominant players in the market. So my strategy in crypto is to simply, as soon as the token come out, try to buy at least between 1,000 to 3,000 of the tokens. And sometimes they come out and they be less than a penny. I mean, so if you have a token that's a tenth of a penny, you can just look at it and see what it does and things like that. See if it makes sense to you, and just go ahead and put your $50 down. I think that $50 is going to, you hit right. I mean, I think that's a better form of betting. Instead of betting to get a number, and your odds of getting the numbers are like infinitesimally small. Well, there's only a finite number of these cryptocurrency companies. So if you're going to put your money down, I would rather put my money down when there's only like 1,000 options as opposed to 1 billion options, right? And so there's only so many cryptocurrency projects. As long as you stay away from the meme coins, just don't buy the meme coins. And go ahead and purchase it, and then just keep doing it over time. So you're going to have the Apples, you're going to have the Facebooks. Listen, there's not going to be a Facebook after this started. After this gets going, it's not going to be a Facebook anymore. It's no point. right? Everybody was just able to communicate with each other instantaneously. It's through cryptocurrency. It's going to be amazing, right? Let's see here. Trump is ushering in crypto golden age. That's why you got to get in on this early.
It's finally made its long-awaited launch into the public markets. Trading at the ticker symbol GEMI, it was briefly halted for volatility almost immediately after its first trade this afternoon. Shares opened at $37.01 after pricing last night at $28 a share. So you saw the gap up, and then suddenly it gapped up to $40 plus a share. Had to be halted. It is now trading at $33.01, up 17.8%, current valuation of more than $4 billion. So the stock really did blast off at the start. You can see it here in the intraday picture, but it's starting just a bit to calm down. And as you see on this first day of trade, true to its sign, the twins of crypto world, Cameron and Tyler Winklevoss, are showing two separate faces, one on Wall Street and the other in the wild world of digital assets. They have both run up here from the NASDAQ. They are joining us live in the studio, co-founders of crypto exchange Gemini. Well, congratulations, guys. It's been a long time coming.
Thank you. Great to be here. I think we were on this show when we launched Gemini in October of 2015. So we're coming up to our 10-year anniversary. So time flies.
Yes, and none of us three look a day older. Let's just say that, even though it's many years after.
I agree with you on that.
Yeah. Tyler, I got to ask you, the original range was $17 to $19 a share. So when you look at this $33 a share print at the moment, that's got to feel pretty good.
It does. It's great to be up on the first day of trading. We've always thought of this as
So they finally took their company public.
Starting line.
These are the same guys that Mark Zuckerberg claims he took his idea for Facebook and they sued him for these twins.
Finish line. And so we've been at this for 10 years, but we plan to be doing this for many more decades to come. So we're excited for the future, and we think it's just beginning. When we first were on this show, when we launched, Bitcoin was at...
Let me see here. Well, I think that's all I wanted to have say for today, guys. I think that's it for today. So, hey, I think you should really take a look at crypto. Why? Because anytime you put your work and effort, there's another place where you can put your work in where someone else is not going to be able to take your profit, right? And so, let's say if you took your money and you went to a bar, then you simply lost that money. You really didn't have a good time, right? You take that same money and you throw it into crypto and think about the long-term gains and everything. I think you're going to hit on something, So I hope this is very helpful for you. Please feel free to like, subscribe, and share. Read Matrix. You guys take care. Ciao, guys. Read out.